And if we go over to the VIX, we know that only a week ago it hit our lowest point since January of 2022. When all of this new crash stuff started, we basically got rid of the fear. So the fear is low, the complacency is there, and the breadth is terrible, which is shown by this Russell 3000. 98% of all the market constituents, basically you can see here, similar highs almost, very low amount of stocks coming up with it. Let's now talk about some of the opportunities in the markets right now. So the first one has got to be treasuries. Treasuries did that little island reversal. They had a great session. And if treasuries keep rising, which seems to be possible, this is, of course, the overall TLT treasuries, we can see here that this could be an island reversal leading into some nice gains in treasuries. And I'd like to see that, but that probably means that yields will continue to fall down. So let's take a look at some other things here. We've got high yield bonds, junk bonds. They're going up a little bit. Now, traditionally, these will dump with markets. So if markets are feeling scared, we should see high yield junk bonds also go down. We might do a special report on high junks if you're interested in the comments, because they are actually showing some positive signs, even though, they've been one of the best indicators of 22 to do with markets going down. So if we think about it, when high junks really got dumped and the market was dumping, that was showing true fear coming in. Right now in 2023, we just don't have that type of fear from the junk market just yet. Let's move over to the US 2-year. You can see it dropping off a little bit here. US 10-year also declining. If US 10-year gets underneath 3.32, that's going to be important. We know we've got alerts set there. We'll talk about it should it happen. But at this stage, it's just declining. That's all it's really doing. So nothing new coming out of the yields. Let's move over to copper. Now, this is the big one. Copper actually made a new low. So you can see here, it made a new low underneath the days. It's had quite a lot of shorts. We're looking for this, though, now, which is that 3.9245 to be taken. So that would be a high, a low, a higher high, and then we're getting basically a lower low. Now, we tested into these supplies, and we found that rejection. And this rejection has just led to weaker copper. And, of course, copper can be a good driver of bad things coming. And if we think about what happened, especially over here, remember what happened in 2020. Look at what copper did the first 2 weeks. The stock market was like this. It's all great. Everything's great. And then all of a sudden it became real, and you can see copper got dived, and then the recovery was just so quick. So when copper's going super bullish, you can feel a lot better about markets. But if this fails, especially if it gets underneath 3.81 again, and then we get through to 3.72, most likely copper will be in a pretty fully fledged downtrend. And we've really discussed this since January. It's what's kind of made us cautious on markets. We have to be cautious because we know there's probably a recession coming because they're talking about it. That's an overused word, but what it really means is a slowdown potentially worldwide. Let's move over here to the dollar index. So we know the dollar index came back to the golden pocket. It found some buys, at least initially. There was a little ascending triangle kind of forming here. Then it dumped through, bought back, sold off. Pretty hard on the dollar at the moment. On the weekly, you're getting signals that are telling you it's bad due to it falling underneath this level here and the closures underneath. On the daily, you're getting some signs of life, being the fact that the markets were actually able to kind of do some changes, but we still are making a series of lower peaks. So here's those lower highs or peaks on the way down, and we can't really say that this is in an uptrend yet or it has switched trends. So this is a point where I could see buyers coming in. We also thought there'd be some buyers there. Obviously, that didn't end up blowing through this level, so we didn't get up here. But yes, I think day traders and scalpers will be pretty clearly looking at this zone. Let's move over to gold. So gold continues to hold this trend line. So basically gold loves the trend line and it's holding it, and it's come up to that most highly traded zone. So you can see here we've got a lot of closed levels as well. I suspect there are bears around that zone. So if we do have respect from the bears, they're going to want to sell in around this area. So maybe we get one more spike into London, we'll find out. But yeah, gold is coming up to pretty critical sell zone. We used it before. It's become pretty obvious, which is not really ideal when you're looking at sells. But yeah, we're coming back up to that sell zone. And if it does breach through here, so I think alerts are worthy above these zones. So if we get above 2015, which we've talked about for a while, that's where buyers really will be showing, okay, well, we've got a big switch trend here, and gold may even actually break to a new high at that point. So a lot at stake here for gold. I have a suspicion it's a bit weaker. I've talked about that for a few weeks now, basically saying that I think gold might be consolidating, that is becoming harder to trade as it distributes because it had such a nice move and everyone's on top of it. But yeah, that's the sellers. They're going to be right around where it is right now if they're coming back. And this is important to note. And I think also if we come back down and retest this trend line again, I doubt it holds. That would be a lower high or lower peak, multiple tests very quickly, usually not a great sign for testing such an important zone. I'd say weakness would come, and of course dollar strength would probably be coming back. That is the US dollar. Natural gas, not much to say here, hasn't filled the gap. However, we do like the basing formation of natural gas at the moment. It's looking okay. US oil, not bad. It actually bounced through. I'd like to see sellers recommence somewhere just in this area here that I'm just putting in. So basically that's where we want to see those US oil traders come back in. I would suspect that they will be there at least initially. From a technical perspective, that makes sense. It's a fairly stacked zone. Let's take a look at the small time frames. Yeah, that's pretty good to form a basing. You can see here the supply initially, so it might do something like this. And if it does, then I'd like to see it breach through, move back to that most traded zone, and somewhere in here, through that supply, we see the bears recommence on oil. So at the moment, I still remain bearish on this. I just want it to get a little bit higher before seeing the bearishness. Speaking of bears, poor Tesla. Tesla keeps copying kind of bad periods of time, though it did find some rally near the end of the session. So you can see here it went worse and then it started going better. I still think 145 is very doable, even 120 on this stock, but let's look at it from a shorter period of time. So we'll actually go to a 15-minute chart and we can see we made a lower low. So if you're looking for these kind of gap fills, everything that happened up here, you're really wanting this market to basically get through something like 166. If it does that, there are some concerns over this little 167.50, but I would probably say that that will be a relatively bullish stance for Tesla on the small time frame. And at the moment, it would just be mostly sells. I mean, there's nothing to say here right now that this market is super bullish. The daily, yes, there's a weak rejection. Yes, it came back up, but it's not that strong. Yeah, it's not like a super weak rejection. It's just consolidating. So you really want it to get through that white line, I think. And then at that point, ideally, it would move further up. And that would most likely mean the stock market has also broken to potentially, a very clear level. 4,180 would be maybe a zone on the SPY I would be thinking about at that time. And if that happens, then maybe everything will start rallying. But I think Tesla, super critical point for it. But at this stage, I still think there's bears, and 145 is the more cleaner action. Let's move over to Apple. Apple at the precipice of making a break. Either way, we can see the upward ascending channel here. We know the trend line's there. That's the most important trend line of the last couple of years, really. I mean, you can see here how it's been tested, 21, 22, 22 late. Every one of the great rallies has been stopped by this trend line. And again, on the weekly, that's exactly what Apple's doing so far. Look at this weekly, long leg or rejection style week into earnings. We'll find out. We've got the expected options highs and lows here, but maybe it's less than 24 hours away. Maybe Microsoft and Google will end up being the catalysts for these. It's the same thing on NVIDIA. Is it distribution? Is it accumulation? We don't know. That's the problem. It's sitting, yes, it's ridiculous maybe. Yes, it's too expensive. Probably even as an investor, I don't like these prices right now, even with a long time frame. It's a great company, bit expensive, probably due for a pullback. You can't see it yet. So that's the issue with all of these charts, very much at these zones. Same thing with the XJO. Look at this. We've got a high, we've got a low, we've got a high. We breached the high up here. We do not realistically make much of a lower low. So stuck within a range, waiting these earnings. You can see how much stuff's waiting. It's just been waiting and waiting. So annoying. Let's move over to the DAX. The DAX is just below 16,000. Again, just chilling around these areas. Okay, that's where it's at. Let's have a look at the Qs. So you can see here the Qs. Again, stuck in a range. Is accumulation, is distribution? We're believing it's distribution mostly because this is where the bears have to put their stand in, and we've got some stats around that. Now, let's have a look at the S&P in just a second to see if we can find some more information. But we still have a lot of gap fills on the low end. The Qs don't give us too much. Let's have a look at the futures. The futures, you can see here, a series of pretty much lower kind of highs. This one was interesting, made a new lower low, kind of just breached out above. If buyers going to recommence, you'd actually want to see them come in kind of around this price. I don't know if I'm convinced they are there. But yep, that's kind of that level. S&P 500, you can see very trapped zone, barely getting through any area. If we look at the SPX, now if you look at the SPX here, you've got 4 unfilled gaps to the downside. This has now been filled, so we don't need to worry about that one. But yeah, basically it looks on the surface, well, this is a doji. This is kind of like an inside, just not inside though, because it went lower. And then we've got another candle inside all of this range. So it's 3 range sessions waiting for the news to get us a breakout. And I've got some theories about that. So let's have a look at the S&P 500 futures. So the first one is, yeah, I think it's, well, this yellow line, firstly, we can basically dump that. So this is the line that took us trend line all the way through. We got the initial bounce off it. That's it. There's nothing more on that one. So we can remove that. Let's get rid of that one. We also know that there's this red trend line, which goes through those last kind of periods. Okay, that seems to have held. And it was one of our theories that we'd get a hold there. So we did get a hold there initially. But if the market is able to get underneath this, surely it goes down. It will test this demand at about 40.89. If we end up getting underneath that, and more importantly here, we make a swing change. So that will put in a massive swing change on the higher timeframes. And all of a sudden we'll go from being in a bullish market to a bearish market again in terms of change of trends. So change of trend is going to be very, very important around this 40.68. I think that's something we're looking for in the future to really show us bears are in. Let's now play the devil's advocate both sides. So the first side is that we see buyers recommence anywhere between here and this low. Okay, so if that happens, where do we go? My theory is we go into this red box, at least initially, and then we find some sellers within this red box. Now, the reason would be that we've kind of gone to the lower low, we've rallied, we've found buyers, and there could be like that initial last trap, or even this could be the real rally to push us through. Remember, on the daily, we kind of have wicks that are still pointing towards the bull action. The trend is up. Trying to stop the trend is hard. So it's not going to be easy for us to do so. And that's why you might have a bearish bias here. Sure, I understand why. There's so many reasons why, don't get me wrong. But we have to keep open to both. So where does the bearish bias die? Probably with a daily close above these highs. 4180 plus closure daily. I would say at that point, the bulls have won for now and they push further. Some people think it's 4200. Look, that's a bit safer, sure. But 4180 might be the real clincher here. So yeah, the case for the bulls is they don't really want a new low. I feel like anything under here, yes, we might see buyers at 40.89 initially, but I could just see all of this becoming a sell zone again. There's a huge amount of trade that's gone through this area. So we know that a lot of trade's gone through where it is right now. Is that bullish or bearish trade? I don't know. We can't tell that until we get the direction, usually when we react to it. So something like this would be sweet. And that would then enable us to probably get that change of trend. So at the moment, the devil's advocate is if buyers are going to commence, they need to commence basically in the next 20, 30 points. And that 20, 30 points would then push up into here. We'll see whether the sellers can actually push down. If they can't and we get above, well, happy days for the bulls. For the bears, all you really want to see is everything underneath here defended and markets to then push underneath 40.68. If that happens, we should move towards filling the other gaps, and I'll give you the other gap numbers. So here are the gap numbers: 40.51, 40.27, and 39.69, with the most traded zone at 4K. So the most interesting thing for bears is going to be that switch there. And if that happens, then we can talk about some bearish action. We're not going to bother with options this week because I don't think, other than the expected options moves, we're going to get that max paying kind of concept. So we'll move over here to Bitcoin. Has it telling us anything? Well, Bitcoin fell straight through this demand, which I did expect buyers to be at. Then it's come back up to our area and it's tested it. It's found sellers. So because it's found sellers, is this the beginning of further weakness for Bitcoin? If Bitcoin gets through this 26 kind of 6 level, that really switches trend for Bitcoin to the downside, at least on 2 hour, 4 hour, probably daily timeframes. That'd be the first time it's switched down in a long